Joining me now is Portfolio Wealth Advisors President and Chief Investment Officer Lee Munson. Lee, great to see you. You say the Fed is getting bullied by this market. Tell us about it.
Well, the 2-year, the difference between the Fed fund rate and the 2-year Treasury right now is as big as it's been since 2008. And so I think that there's a pervasive view on Wall Street that, a 50 basis point would be better for stocks. It would give us more clarity. But here's the thing. This Fed chairman, since COVID, wants on his tombstone not Arthur Burns. He wants to be the guy, the Paul Volcker, the guy who beat inflation. Now, that's been the case. Just only recently has unemployment been a problem. So I think that if there's any showdown right now, it's a Fed messaging to people, we're not going to have politics and we're not going to have big bond players push us around. And that was the case when they let inflation go too long. They didn't want to be bullied. And so why are they going to be bullied now? So I think it's going to be a showdown between, the nerves of Jay Powell and if he thinks he can really keep this credibility and slow roll this. That's been his message all through this time.
Well, which is why, the statement is so important with the press conference at 2:30 today. We'll understand further whether or not this is going to be a string of rate cuts. I wonder if the market sells off on a 25 basis point cut now that all of these expectations have been rising so much that a 50 basis point cut is coming. What do you think?
Well, that's what I'm hoping for. I'm sort of,
I
want to have a 25. No, I want 25 basis points because then I get to buy stuff cheap. Remember, I love a little pullback. If I could see 25 basis points, see people panic, panic, that would mean the economy maybe is doing less bad than we think. Right. Maybe it's the Fed behind the curve. But you know what? Traders want this so bad they feel it's in the bag. It'll be a shock. Now, I'm not saying that we're going to get a 10% correction, but if you got a little cash on the sidelines and you see 3-5% on a news reaction, I would buy that any day.
Adam, it's interesting. It's all about the expectations, right? If we get a 25 basis point cut, which most people were expecting just a few weeks ago, but now with the 63% chance that it's 50 basis points, 25 could actually cause a sell-off.
Yeah, ironically, it really could. And yet the funny thing is for weeks we've been saying, well, if he cuts by 50, then does it suggest that he thinks there's something really wrong with the economy? Oh, my gosh, what does he see that we don't? So the expectations absolutely matter. But, Lee, I want to actually push back a little bit on the fact that you said you actually hope we get a pullback today. We've gotten several pullbacks over the past several weeks, and I know because I've taken some hits in the portfolio. Do you really want another one?
Well, as a portfolio manager, I always want to get things cheaper. But, I do, and I'll tell you why. We're near all-time highs now. And if we start getting too bulled up and we start getting closer to 6,000, we're already pricing in the end of next year's earnings. Plus, we all know we're going to get some volatility around the election. Why not start this process now? I don't think that we're done with that yen carry trade that caused the August 5th bottoming out. And I think a little bit more volatility would give us a pause, a little bit of opportunity to get a fresh new year after the election when we have legislative and regulatory clarity. So I think this is the time for volatility. It's seasonal, and I think it's good to sort of wash out some of that froth ahead of the election.
So, Lee, yesterday, Thomas Lee from Fundstrat came out with a report to his clients. He says post-FOMC, equity markets trade in the next few weeks is noise. The Fed put is back, and 3 reasons the good news is not priced in. He still is bullish, and he's basically saying that the Fed put is back. That means the Fed's mandate is now primarily supporting a strong labor market. In other words, rates are coming down. That put is in place, and whatever happens today in the next couple of days is all noise. You say there should not be any rate cut in December because the election is a fundamental economic event and could be read the wrong way. But look, a lot of people, whatever we get today, are going to say this is all political.
I saw you in person this summer and you asked me about rate cuts and I said, the Fed's not going to do anything till November, right? And that was based on that concept that the election is part of the fundamental sort of fabric of the economy right now because of the uncertainty about these two different, ideas. Now listen, everybody loves Tom Lee. I read all of his stuff. He's extremely entertaining. I wish I could be as crazy as his with some of his, thought process and his bullishness sometimes.
Well, he's been right.
Let's be realistic. Yeah, let's be realistic. He does make a good point. I think once these Fed cuts start, there is this idea that the Fed is going to come in and save anything. That's why I would love to see volatility now ahead of the election when we have uncertainty. There's a reason for it.
Yep. Yeah, he goes on to say the biggest barometer in our view is the stock market. If the market falls 20%, it raises the risk of recession sharply. If it falls 30%, wealth destruction would almost guarantee a recession. And even a decline of 10% in a soft labor market environment risks businesses getting cautious, exactly what the Fed does not want. So the Fed is in place, and that's why he says it's noise around it. Lee, we're going to be watching. It's great to catch up with you as always. Thank you so much.
Thank you.
Lee Munson.